Hello, everyone. Welcome to tax season 2020. This is our tax season readiness kickoff webinar. My name is Shanita Jones, and I am the owner and CEO of Jones Taxes and Financial Services. We held this event originally back in early January, and we had such a great response that we were asked to do it again. We did it again, and now this is the third time, and this particular presentation is being recorded. It is not a live presentation. So if you have 80 questions after the fact, you can feel free to email us. Our contact information is laced throughout this presentation, but the best email is team@jonestaxesonline.com. That way myself, one of the other accountants, or an administrative professional will get your message and we will respond to you as quickly as possible. So without further ado, I am going to go ahead and get this started. So as I mentioned, my name is Shanita Jones. I am a certified public accountant. I hold 3 degrees in business administration. This presentation is being brought to you today because we specialize in the childcare industry and we are here to help you guys make a difference and be fully prepared for tax season. So this is our agenda. We're going to start with a brief introduction. That's what I just did. I'm also going to introduce you to our awesome team. There's a few housekeeping matters that we need to discuss. We'll talk a little bit about entity and the difference that it makes in your tax filing. We'll talk a little bit about home versus center child cares. Of course, we have to cover bookkeeping and documentation. We'll discuss some common mistakes and misconceptions that are made and believed during tax season. We will discuss required documentation. We will give you a brief overview of our tax preparation process. And if you are still feeling overwhelmed, uneasy, or not ready, we are available to answer some questions for you. Does that sound all right? So as previously stated, my name is Shanita Jones. I'm the owner and operator of Jones Taxes and Financial Services. And now I'm going to introduce you to our team. Well, this is me, tax lady, daycare accountant and taxes. On the bottom left is Miss Anita Brown. She is our accounting manager. Miss Anita is responsible for most of the bookkeeping and accounting stuff that happens. I oversee everything, and Anita helps me manage that. We also have Miss Jackie Baptiste on our team. She is also a certified public accountant. Miss Baptiste is primarily over our tax, but she also does and excels in accounting and bookkeeping as well. Our operations manager is Papa Bear, Mr. Karan Jones. He is my husband, and he is also a tax professional. We have my lovely mother-in-law, Miss Charlene Jones. She is a tax professional. She's a well-seasoned tax professional. And the newest member of our team is Miss Nisa Powell. She's our financial admin. She's also a QuickBooks Pro advisor, and she does some QuickBooks administrative and bookkeeping functions on our team as well. Housekeeping matters. The best way to contact us is email and not social media. We are very active on social media. However, during tax season, our tax returns have our undivided attention. So if you are trying to get in touch with us, we really want you to send us an email, book a call on a calendar, or you can send a text to the business line. But just the FYI, our business line text does not receive images. It only receives words, okay? Sensitive information. This includes passwords, account numbers, social security numbers, tax forms. Please do not send this information through Facebook Messenger. Don't let it go down in the DM or these these pieces of information should be transmitted to us via our secure forms or portals. All of our forms have the same level of encryption that banks use and that the IRS requires us to have. We have software set up to kick back this information because we do not want you to have your information to be ever intercepted by a party that it was not intended for. So please, no sensitive information through Facebook inbox. We experience this a lot, and that's why I'm bringing it up. I'm sure no one on this call would do that, or no one watching this, but there are some people that have made that mistake, and we just want to protect your information. Please note, we do not offer tax accounting training or assistance. We do not provide support for TurboTax or Free Tax USA or any of those things. For insurance and licensing purposes, we are only able to give specific tax or accounting advice to engage clients. Everyone's situation is different. So you may have a friend that was given some really good information, some really good advice, and is working well for her. Tax advice is sort of kind of like prescription medicine. If you take something that was prescribed to someone else, it may have a very negative interaction for you. And we don't want anyone to have negative interactions. You should also note we will not begin any tax or accounting work until we have everything we need. This helps us to operate efficiently and accurately. You will be contacted for additional information, questions, and our final review and interview of your tax situation. Entity makes a difference. So for those of you in my Facebook group, and if you are not in my Facebook group, we create tremendous value in our group. It's an awesome community. It's filled with the best ladies and gentlemen in the childcare profession. And we talk a lot about a lot of the business aspects. So if you are not in it, go to Facebook, Daycare Profit Strategy Community, hosted by Shanita Jones. There are lessons under the unit section where you can find information on each of these entities. If after watching you decide you would like a specific consultation to know about your situation, that is a service that we offer. So, entity, it makes a huge difference in your tax return. If you are a sole proprietorship, you will file a 1040 form Schedule C. You will not file your business tax return separate from your personal if you are a sole proprietorship. A sole proprietorship could be just a person doing business with a DBA, a doing business as named, or you may be a single member LLC. But there is no such thing as a federal LLC return. And I always joke that if you can produce one for me, I will give you $500. Send me a Cash App handle and show me your federal LLC tax return. There is no such one. And I would like all of the people that we come in contact with to be educated, informed, and empowered. So know your entity. A partnership does get filed separately from your personal tax return. A partnership return is a form 1065, 1065, and a partnership could be a multi-member LLC, or it could just be two individuals that decided to go into business together. You cannot file your individual tax return until your partnership return is filed. And the reason for that is the partnership return will generate a K-1 form so that the loss or profit can pass through to your personal return. A partnership is a pass-through entity. Partnerships do not pay taxes. At the partnership level, they do not pay income taxes. S corporations are very popular. An S corporation can consist of one owner or multiple owners. An S corporation, in order for you to have one, you must have first had an LLC or a C corporation. And that S corporation gets filed on a form 1120S. Again, an S corp, like a C corp, is a pass-through entity, and it must be filed prior to filing your personal tax return. S corps generally do not pay income taxes at an S corp level. C corporations. C corporations are separate legal entities. They're separate people, and C corps get filed on an 1120S tax return. I'm sorry, 1120. C corps are the only entity that will pay taxes, income taxes, on its own. I have a lesson on C corps as well. Not mentioned here are nonprofit returns. We do those as well. Form 990, Form 990 EZ, Form 990 in the postcard. If you have gross receipts less than $50,000, we just advise you of how you will be able to complete that form yourself. Homes versus centers. I get a lot of questions. I'm in a home, can you help me? I'm in a center, can you help me? What's the difference between a home and a center? What can I write off? Guess what? There are a lot of similarities between homes and centers, and there are differences, obviously, between homes and centers. For both types of businesses, anything that is exclusively used for business, that is going to be exclusively something that can be written off. In most cases, I have to put these little qualifiers in there. Now, before we proceed, please take my disclaimer. I am not a lawyer. I'm not licensed to practice law. I'm a certified public accountant. Any information that you receive here should not be interpreted as specific advice to your situation. For specific advice to your situation, we would have to know your situation. With that being said, for homes, your time-space ratio, one of the most important numbers you have, it will determine the amount of your utilities that you're going to be able to deduct. Now, when I say utilities, I use this term broadly. I do mean your electric, your gas, your cable, your internet, your house phone, your fax line if you have one, exterminator services, lawn care services, home security service, and a whole lot of other things. If you're in the center, you're going to just deduct your total utility and rent. But if you're in a home, a portion of that rent would be deducted. If you own your home, your mortgage payment is not deductible. Instead, you would get depreciation for your home. And the easiest way that I explain this is if you owned a home and you paid $39,000 for it, you got a great deal. The IRS says that a building used for business has a useful life of 39 years. So if you paid $39,000 for that home, you would get to write off $1,000 every year. But remember I told you about that time-space ratio? If you're only using 40% of your home for the daycare, you would get, 40% of that $1,000, which would be $400. So there's a difference. It's a complex calculation involving depreciation. We do not teach depreciation. That's upper level. 1099s. 1099s. All income received in, whether you're in a home or a center, that needs to be reported. Cash, credit card, checks, Venmo, Cash App, PayPal, and any Zelle, and any other method that you use to collect cash, that needs to be reported. It goes on your tax return, whatever the entity is. When we go to prepare your tax return, there is a code on your return that indicates you're a child care center, home or house. The IRS knows that child care centers, for the most part, get a lot, in some areas, they get a lot of their revenue from state funding. But they also know about co-payments, they know about private payments. So if you forget to report your cash, you are also a person that would probably be higher on a list of individuals they would do an examination on. Payroll information. If you have employees and you're in a home and you have employees in the center, we are going to ask for your W-3s and your state quarterly tax returns and your state unemployment information. That is because as an employer, you are paying these taxes. We get a lot of tax returns where we don't get this information and people miss out. Same thing with workers' comp. If your workers' comp isn't being paid through your payroll company, we would like that too, please, along with your liability insurance, because these are all deductions that are going to help to make you guys, your tax liabilities less. So 1096s and 1099s if you have independent contractors. Now, if you have independent contractors, please review the IRS employee versus independent contractor test. Most workers that show up and work in your center every day are not independent contractors. Most of those people are probably employees and they should be on payroll. Okay? Repairs. If you own your home and you're in a home daycare, and even if you rent a home and you're in a home daycare, you only going to get a deduction for repairs for the portion that is attributable to business use. If you're in a center, it's all business, so all repairs are deductible. Another sidebar item I want to note, if you have to do something large, like put a roof on a building or build out, that is not going to be deducted all in 1 year if it's an improvement. Instead, the IRS requires us to break it down over the course of several years, similar to the depreciation concept that I discussed. And that's a good thing because we are operating under the assumption that we're going to become more and more profitable every year. So if we're going to become more and more profitable every year, it's a great thing that we are going to be able to carry expenses into the future. This is another reason why we ask for a copy of the prior year tax return before we prepare your tax return. There may be deductions and credits you couldn't take in the prior year. So if you couldn't get it all in 2018 and there's some remaining for 2019, we want you to get it. Record keeping. We will need to have a profit and loss statement, either from QuickBooks, daycare software, Xero, or it could be manually prepared. If you don't have a profit and loss statement, we do have forms. We have a PDF version, and we also have an electronic version where we will ask you the questions and you can fill in the information that we need to prepare your tax return. If you have a partnership, an S corporation, or a C corporation, also known as an entity return, you really need to have a balance sheet, especially if gross receipts are $250,000 or greater. And this is because that's a required part of your tax return. And if it's not filed, you will get a letter. I've done a lot of amended returns because those items were omitted. Bank reconciliations should have been performed if applicable, and this ensures that no deduction is left behind. If you have QuickBooks, your bank reconciliation is not when you go through that bank feed, match, add, transfer. That is not a bank reconciliation. That is not accounting. That actually gets a lot of people into trouble because QuickBooks operates with artificial intelligence, and that intelligence is artificial. It does not replace the skill and knowledge of someone who knows what they're doing or has been thoroughly trained in it. We want to make sure these bank reconciliations are done so that anything that belongs in this category, if it's deductible, we want to get it. Likewise, if it's taxable, we want to put it there. We do not want to see anyone get audited by the IRS and lose simply because they didn't reconcile their bank account. And if you don't know what a bank reconciliation is, you probably should consult someone that does. We are accepting new clients. Receipts. We are not required to examine receipts, but we do ask you to break out any renovations, purchases of items over $2,500 or more. We ask you to list the date, what the item was, and the cost. And this is related to that amortization and depreciation I mentioned on the previous slide, where some things have to be deducted over a number of years. If you do not have accounting software, where are you going to get these statements from, right? We thought of that. You will be sent an invitation to complete a form containing your business income and expense information. You would just fill in the blanks. We'll take care of the rest. If your expenses are not totaled, we can do the bookkeeping for you. If you have a crazy QuickBooks file and you have a bunch of transactions in the bank feed, or you might be watching this and you thought your bank feed, your QuickBooks was reconciled because you were match, add. If you need someone to look over it and do an analysis, we can do that for you. There is an additional charge, and we can also prepare the tax return. You can also decide to have us take care of this for you for 2020 moving forward if you so choose. If you made estimated income tax payments for 2019, please provide the IRS printout so that you can receive credit for these payments on your tax return. I can't count how many business owners pay their estimated quarterly tax like good citizens and forget to include it on the tax return. If you owe $1,000, but you've paid $500 during a year, you're only going to need to pay another $500. But if you don't record that, you're going to end up paying a whole $1,000 over again. You've been paid $1,500. Yes, you can get the money back, but do you think the IRS is really diligently looking for overpayments? I don't think so. Comminglers. If you commingle business and personal funds, this means if you are using your business credit card and you're swiping, and you are purchasing personal items. I see hairdos, I see gas, I see all sorts of things that people are buying in their business accounts. You want to make sure you check all of your bank and credit card accounts for deductible items that might be missed. Because when I see them doing the personal things in a business account, a lot of times the people are also doing business things in the personal account. So if you pay for business items in your personal account and it's not in your business bank account, it's probably going to be missed. And if you're working with an accountant, if you don't give us that information, it's no way for us to know about it. So a good rule of thumb, and there's many reasons why it will not be covered in this video, you really do not want to commingle. And for more information on commingling, take a look in the unit sections of our group. We talk a lot about that. That is a hot topic. Common mistakes and misconceptions. Oops. So, mortgage payments are not deductible. Interest and depreciation are, but not mortgage payments themselves. Mortgage payments are liabilities. That mortgage that you have is an asset. You own that property. When you pay for the loan that you have on it, you are just going to reduce your cash and reduce the amount of the loan. It's not an expense. It all happens on the balance sheet. See my video in the group on credit cards. Mortgages work the same way as do loans, as the video that I did on credit card payments. Likewise, number 2, credit card payments are not deductible. But expenses but the expenses you purchase with your credit card and the interest you pay are deductible. And I forgot to mention, mortgage payments are not deductible, but the property tax, if it's through your mortgage, that is deductible. Tuition for your own school-age children is not deductible. Even though you're running a center, you might send your child to a religious or a private school, that tuition is not deductible. Before care and after care is, but not their actual day-to-day grade school. Professional hairstyles and clothing are not deductible, even if it's for personal appearance. Yes, you have to look the best when you show up for work, but the way I explain it to people is, look at yourself. Does it make sense for you to wear that anywhere else? If you could get away with wearing your outfit someplace else, it's not deductible. Okay? So you want to be careful with that, as just like the dry cleaning for your personal clothes. Now, a lot of the people that I work with, they do wear scrubs or uniforms. Those will be deductible. But your regular clothes, your regular hairdos, not deductible. Commuting to and from your primary work location are not deductible. The government will not in any way incentivize us for going to work. They will not subsidize our transportation costs or those of our employees that we may pay to get to and from work for our convenience. Maybe your opener lives far and doesn't drive and you're going to send a Lyft. Not deductible. Personal expenses are not deductible. They do not belong on your profit and loss statement. I've received tax returns that people sent me, and on their profit and loss statement, it was personal. It literally said personal expenses. No, those reduce your equity in the business. They are not part of the income statement. They belong on a balance sheet. If your accountant is doing this, you need a new accountant. I'm not even going to put my bid in. See my videos. Failing to maintain an accounting system is a common mistake. It causes business owners to miss thousands in deductions and pay too much in taxes. It also makes proper tax planning virtually impossible. It makes budgeting extremely difficult, and it usually leads to cash flow problems. And you're not aware of it until you are aware of it. And at that time, that's usually where we end up having to get really bad loans or worse. So you really want to keep an accounting system. If you are unable to do it yourself, maybe you're too busy, maybe numbers isn't your thing, we are accepting new clients still, so we are available. Mileage and actual car expenses are not both deductible. You're either going to get a deduction for mileage for business driving. Maybe you're taking the kids to and from the center. Maybe you're doing pickups, drop-offs. Maybe you're going to conferences. Maybe you're going to the grocery store for the center. Are y'all picking up what I'm putting down? Maybe you're going to Michael's to buy crafts. Maybe you're driving around looking for a new location. Maybe you're doing a number of daycare-related assignments or tasks. That mileage is deductible. Or you can do the actual expenses. Either way, you need to track your mileage. The easiest way to do it is to get Mile IQ, put it on your phone, and it go where you go. Last year, the mileage rate was 58 cents a mile. Excuse me. What does this mean? For every 100 miles you drive, you get 58 bucks. But you need to keep track of that in order to get it. Now, this is an item where I've seen a lot of audits. I've been a part of a lot of audits. But when you go to deduct those miles on their tax return, if the IRS ever looks into it, they want to see a log. The easiest way to do it is to set it and forget it with an act. If you're a partnership, a S Corp, or a C Corp, again, your business return must be filed before your personal return. Information from the business is needed to even begin to file your personal tax return. Required documentation. This is one of my favorite slides. I could just put this up here by itself for a whole nother topic. We ask for unexpired identification. Yes, we know that you are the same person before your ID expired, but we are required to have certain things on file because we are audited by authorities on a regular basis the same way as you. As long as we pass, we're good. And fines and penalties for failing to comply with the IRS regulations are hefty. So the same way we don't want you to incur any unnecessary expenses, we don't want to subject ourselves to that either. So we need unexpired ID. For dependents, we need proof of residency that they live with you. This can be something as simple as your child's name on the medical card form they sent you. Maybe you have a 1095 from your medical insurance. It's got your name, it's got their name, it's got their address. Boom. We do ask for proof of relationship if the last name is different and it's your child. If you are taking care of a niece, a nephew, a grandchild, or something of that nature, we also may ask for additional information. If you are married filing separately, you still need to report your spouse's social and their date of birth. This is the IRS's way of making sure that both spouses aren't splitting the kids and filing head of household, or one claiming the kids head of household and one is single. That is why this is asked. Your return cannot be filed electronically without it. And if it has to be filed via paper because you don't have it, you probably will be getting an audit and they probably will track down your spouse. Another reason they do it is because if one person itemizes, both need to itemize. So they just want to make sure no one's gaming the system. We will ask for your IRS EIN letter. We ask for your IRS EIN letter because we just want to make sure we're filing the proper return for the proper people. We've spoken with a lot of people that have filed sole proprietor returns, but really they set their EIN up as a partnership that fell through, or an S Corp or a C Corp, or they've done something. We take no pleasure in being paid to perform a task or to provide a service and finding out that you asked us to provide the wrong service. So we do every measure of due diligence that we can to make sure that we're filing the proper return for you. And that's why we ask for this along with your last tax return. Prior year tax return is something we ask for. We also ask for your profit and loss statement, or you complete one of our forms detailing your income and expenses. We need a balance sheet for partnerships, S Corps, and C Corps. We can generate one for you, but you really should have these for your business. And the profit and loss and balance sheet, just to go a little off topic, if you plan on growing, getting investors, getting loans, getting credit for your business, you're going to need to have these forms. Okay? If you have any IRS, C Corp, or S Corp approval letters, maybe you weren't an S Corp or C Corp in 2018, but now you are in 2019, we just ask to see that letter to make sure that it was approved and make sure we had the proper effective date. And make sure, because sometimes some people will need to file one thing for one part of the year and one thing for the balance. Again, we just want to do it right the first time, one time, and we want everything to go well for you. So that's why we ask for all of this. We need all 1099s, all W-2s, any other tax forms that you receive, even if you were told that it's not taxable. There are some items that are reportable but not taxable, and failure to report them will get you a nasty gram from the IRS. If you're getting a refund, we need direct deposit information, and we will also be asking you to triple verify it to make sure that your deposit goes where you want it to go. We ask everyone to complete a tax prep questionnaire, and we ask you to take your time and go through it and answer those questions, because we are required to ask you these things to file your tax return. And finally, as with any service we provide for you outside of a consultation, we need a signed engagement letter. And that just clearly explains what we will be doing, what we will not be doing, and how the relationship goes. We like to be fully transparent and make sure you understand. Now, this is how our process works. So if you're interested in having us prepare your taxes, you're going to, complete a questionnaire, and there's a deposit for all new clients. You're going to be able to upload documents to your form. This form is a secure form. You can find this form on our website at jonestaxesonline.com. Start My Taxes, the button's in the middle of the bar. Or you can also get a hold of this form by emailing team@jonestaxesonline.com. If you miss something, additional documents will be requested so that you can upload them to our secure portal. We do not want you to email anything with a social security number, bank account number, or anything sensitive. We will provide you with a portal to securely upload it. This is the same portal where your tax return will be returned to you and where you will be able to retrieve it for years to come if you ever need a copy. And there's no charge because it's self-service. You can go in here, only you can get it. If you lose your username and password, we don't even have it. You would have to reset it. That's how secure it is. So after you complete the questionnaire and you upload any additional documents we might ask for, you'll receive an invoice letting you know what your balance is before we begin. We do post our prices. We do have full disclosure. We don't want to waste anyone's time, and we're very busy. So we like to let you know up front, this is what the cost of your tax return will be. If we're performing any bookkeeping work, we'll be working on that if any cleanup is necessary. After all that's done, the tax preparation begins, and you will probably be contacted for additional information or possibly an interview. Once the tax return is completed, we will deliver the results to you either verbally or we will hop on a video call with you that's still verbal, and we will also give it to you in writing. Then the e-filing consent is sent to you, and all approved tax returns are filed electronically. Once they're all signed and everything is paid in full, we're able to file electronically for you. It's important that you know we will not begin working on your tax return until all documents are received. We will not midway be able to provide you with an estimate of how you're looking so far because we will not start until we have everything. Returns are only filed once the invoices are paid in total. And the reason why we will not begin until work is received is because our people are really important to us. We don't want to pick it up, put it down, walk away, forget about it, think about something else. No, we want to make sure all of your stuff is done and all of your stuff is done right. So in order for us to continue to be extremely effective and efficient, we need to start when we have everything in place. If we discover we're missing anything, we'll just contact you so that we can get whatever we're missing. But we try to avoid that from happening. We try to just have everything. So we do have some special early bird offers. Some people may be, oh, what does it cost? It costs too much CPA. No, I think they were very reasonable. We're not the cheapest, of course, but we're not the most expensive either. But I can tell you that we create and we provide a tremendous amount of value for the fees that we charge. I can tell you that we charge a lot less than our services are worth, if you understand it. So you can ask about our specials. The first one is we can do your bookkeeping and your tax preparation for all of 2019. We'll do it for you. There's no setup fee if you also want us to do your 2020 bookkeeping going forward. We'll quote you a flat rate fee, and you can say bye-bye to hourly billing. This offer was valid. It started January 18th, and it is valid through February 15th. I know I spelled thorough, but that means I count. I don't always spell correctly. Forgive me. That's my joke. Kind of corny. I get it. I know. Nevertheless, that's how we do. We take a look, and as long as we have all of the information, we're able to quote you a flat fee, tell you how much it's going to be, and we'll get it done for you. If you don't have time or you don't have the expertise or you're afraid you're going to miss something. Do you have books, but you're just not sure that they're right? You can purchase a diagnostics review of your QuickBooks file. What do you get with that? With that, you'll receive a written report of our findings, and we'll tell you how they impact your tax return. So we'll look through all the information, anything that may be out of place or incorrectly done. We will give you a written report, let you know what's wrong, and we're offering that. It's usually a $600 value service, but we're doing it for $350. That offer is only valid through for another to January the 31st. So if you're interested in that, that's definitely something that you want to look into soon. If you need specific tax advice, you can book a tax consultation with us. It's $175. You will speak to a certified public accountant, and you can learn if there are strategies that you can implement today to save you money. The consultation fee, if you would like to speak to us because you want to have your taxes done and you just want to have a quick call beforehand, a quick call, 15-minute call, there's no charge for that, but no advice will be provided on that call. A consultation is a separate engagement and it does have a fee. We do give away a ton of information, but we basically work on an hour. So if you want specific advice, you can certainly have that, but there is a fee. You will receive an invoice before the call, and you'll learn if there are things you can do, and you can ask whatever you want to ask. If you want to call to discuss having your tax return done, the fee will be charged, but it will be applied towards your tax return fee. How do you get started? Well, the easiest way is to email team@jonestaxesonline.com and ask to be sent a tax prep questionnaire. Once you receive it, please complete the secure form, uploading everything we ask for. Once we receive your initial submission, we will contact you for additional information, documentation, or schedule your interview where we discuss things. Okay? Everything is received electronically. We will also let you know that we got it. You should receive a confirmation email. You may also visit us on the web at www.jonestaxesonline.com, and you can click the Start My Taxes button in the center of the screen. We'll set up an appointment with you once we've reviewed all your documentation. And if you want to book that appointment in advance to discuss, as I mentioned before, there is a charge, but we apply that charge towards your tax preparation unless the consultation is for a separate engagement, such as, specific advice. If you have any questions, comments, or suggestions, the fastest way to reach us is send us an email at team@jonestaxesonline.com, or by giving us a phone call at 215-294-7190, and we will be more than happy to help you. Okay? So if you are interested, we also just want to make sure, because this didn't take quite as long as I thought it would. So if you are wondering, can I deduct this? Can I deduct that? The general rule of thumb, if it is ordinary and necessary and exclusive for business, 9 times out of 10, that is deductible. If it is something that is a shared thing, it potentially is deductible, but you will want to get advice from your specific tax professional. We've been specializing in child care tax for the years, so we are used to it. Child care is a very unique industry. So whether or not you choose to decide to allow us to earn your business and prepare your tax return this year, or you go to someone else, you really want to make sure that person specializes in child care tax and accounting. As I previously mentioned, this is a recording. I am not recording live, but I will upload it and send it out because I've been asked for it. If you, are not part of our Facebook group, you really want to get in, Daycare Profit Strategy Community, feel free to ask questions. Check out the units first. We talk about entities. We talk about taxes. We talk about how to get paid. We talk about advertising. We talk about marketing. We talk about enrollment. We talk about so many different things that affects the business side. We talk about HR. We talk about employees. We talk about profitability. And why do we talk about all of these things? Because all of these things directly affect our profitability. Even our tax returns affect our profitability. And if you are sitting here right now under the sound of my voice and you do not know how much you made in 2019, you really need to get a handle on that. And I say that because we're in 2020 now. Today is January 24th, 2020 to be exact. And you really want to know, because there's no way that you can grow your numbers if you do not know your numbers. There's no way you can tax plan. There's no way you can budget. There's no way you can do any of that. So as mentioned before, my name is Shanita Jones. I am a certified public accountant, and I am a child care profit strategist, and I do daycare accounting and taxes. You probably recognize the t-shirt. Thank you so much for watching, and if we can be of assistance to you, we would love to help you. Bye-bye.